All right, welcome back. We're here for some midnight back testing, working through February using Deepcharts platform. Just keep in mind that these back testing streams are one-way communication. They're also just for my general historic back testing of NASDAQ for reference, for practice, getting the reps in, and being published in the public domain on YouTube for myself as well as anybody else who cares to pay attention to a random dude who has no profitable results in trading, who's going on an adventure trying to make something of myself by learning one of the most difficult things imaginable on the planet, where only about 5% of futures traders, especially in the prop firm space, are actually profitable long term. I like a challenge. So we're just going to keep driving through and back testing. But before we go into back testing, let me open up a browser here. And let's open up Excalidraw. So we have a pretty crazy week coming up. This is a little bit off topic because we're working through February. So we have this little research document looking at our outlook for the next month. Well, we just had a confirmed assassination of the Iranian supreme leader in a joint Israeli-U.S. operation. This publicly stated goal of the operation is a regime change. And if we look at the historic pattern of conflict in the recent history that's occurred in the Middle East, we're likely to see, or more likely to see, a sell-off next week. And depending on what happens, possibly a swift recovery if we find stability and uncertainty on the outcome of the situation diminishes. But it seems like Iran is retaliating and bombing U.S. assets, some other Middle Eastern assets of other countries. So this is a pretty significant operation. And on top of it being a significant operation, Trump did it without getting support from Congress, which there's also some news out there that Congress is not too happy with that. So I haven't followed this situation 100. I'm not following it on X. I'm not really following the minute to minute action. However, if we just look at some of these key points, this might help you in your evaluation of next week's futures trading. So in 1991, we had Desert Storm. I was actually in the military at that time. Was not trading. Was a very short conflict. We were there for about a week before everything stabilized. But we had a 5% drop over a 2 week period. Shit, we get that in a couple of days now. But moving on to 2003, we had the invasion of Iraq. Leading up to the war, S&P experiences a significant decline. I think it was like 7%. I'll take a look. I have a graph at the bottom here. In the week prior to the invasion, but the markets did rally, and So this one had like 6 consecutive days where the market advanced in the positive, and then eventually in a subsequent week the rallies or the realities of the conflict set in, and the S&P dropped about 3.5%. Sorry for my poor language. It's just getting a little late, but we're still going to push through this because we got to get the work done. So that's 2020. We had an assassination attempt in Iran where the S&P fell about 0.7%. That's a normal day, so nothing too extreme. We saw oil and gas prices spike. Shit, that could happen again. However, we bounced back pretty quick when the situation doesn't escalate into a full-blown war, unlike what might be more likely to happen here. Fast forward to last year, this year, we had some preemptive bombings in the Middle East, Iranian nuclear facility bombings, or Iran. Sorry if I'm pronouncing that incorrectly. No disrespect intended. S&P 500 experienced 5% drop at the start of the conflict, before rallying back. And our current situation in the market is it closed lower to end February. Index levels on Friday. NASDAQ down 1.2%, and the S&P down 0.5%. Interest rates are holding around 3.5 to 3.75%, and crude oil prices we're trading at $67 a barrel at 2.7% on February 27th. So obviously there are ships out in the sea, and all kinds of things are happening. So who knows, right? Few different scenarios here. Number one, putting about a 60% probability on it, sharp sell-off. Given the unprecedented nature of the event and the likelihood of Iranian retaliation, significant sell-off. Risk-off sentiment is the most probable initial reaction. So probably going to see it move or gap down at the start of the open. And who knows if it will continue to drive lower. We'll see what the newswire has in store and how this all plays out, and that'll give us some more information. Another scenario might find an initial drop, but quickly rebound. Third, maybe a counterintuitive rally, which is pretty much low probability. If we look at this graph here, the 1991 Gulf War, it started up and then it moved down 5%, or it initially moved down 5%, and it moved up and recovered pretty swiftly. 2020 assassination, it went down 0.7%, not a big deal. 2003 Iraq war, 3.5% down. 2025 12-day war where we bombed the facilities, down 4%. 2024 Israel-Iran attack, some more preemptive strikes, 5%. And 1991 initial Gulf War, again 5%. And the 2003 pre-war, down 7%. So probabilities are higher that we're going to have a drop. So that's all I really wanted to share on that. So for next week, Sunday open tomorrow, that's one thing that I'm looking at. So back to our back testing. I always like to recap what we're looking at if you're tuning in for the first time to one of these sessions or you care. This is Deepcharts platform. I trade futures on prop firms, trying to become a better trader without risking all of my own capital and still have some skin in the game. I currently have 5 paid accounts through Apex. I've blown many accounts. I've done many bonehead things. But in the past month, really refining through backtesting and using the platform and setting up these tools in a way that it makes sense for me, because I think you need to make trading your own. And I've been trading 40 hours a week, or at least studying and trading, that spending that much time working on the craft since Black Friday of last year. So basically over a year now, a year and a few months. So we're going on about 15 months, and I'm not profitable. Wouldn't say I've lost a ton of money, but I'm paying my tuition fees with all of the blown accounts. Have passed a couple top step accounts in the past as well, but blew those pretty quickly because I needed to blow my load. But that being said, we're looking at a 90-day profile here. It's a time price opportunity profile. So it's based on time, 30-minute blocks of time, some other colors in here as opposed to a volume profile. Now, on the right side, I do have a volume profile composite for the 90 days. And then I have some levels marked that are interesting to me in gray, gold, and red. So what I'm expecting right now is we've been in a pretty strong downswing for the last few days. And another thing is this is retail trading hours. And we closed at the value area high of a profile back on, what's that, November 21st. So this is November 21st of last year. So we're dipping into pricing from last year. We've swept some highs, or excuse me, some lows along the way. Could this be a pullback before we continue to move back up to the value area of the composite profile and maybe the POC before moving lower or coming back up and taking out the high? I don't know. But this looks like we already have momentum to the downside. And then we add in the fact that obviously that's a little bit earlier in the month, but you get the idea. If we're getting that add in war, we're likely to also get more of this type of price action based on the historic conflicts and events that I just shared with you. So 60% probability, might be higher, but I think 60% is fair. Now we got the value area low of this November 21st profile. We're also around the point of control of this November profile. So we'll see how the price action opens up on February 6th, which is our next backtesting day. And we'll take it from there. Obviously, all of this is played out, but I don't remember what happened. And we've been ranging up and down for so long. I expect that at any point over the next month that we backtest, price is going to just be going up and down through this range because it's been basically ranging since October 10th. So I think it's a good area to backtest. All right, so coming back to our trading chart, and note that these areas that are marked on this chart come from the profile chart that I just shared. It's a 40 range chart, 40 ticks per candle. I have a speed of tape indicator over here to the right, which shows me when price is moving fast, lots of volumes being traded. I'm trading a sim account above. These are for the last couple days of trading, sim trading, back testing, showing the profit there. Obviously, it's sim trading, so it's really just back tested profits. Nothing to brag about. And then as far as the candles go, let's zoom in a little bit here. Kind of chilling out in the chair, so it's going to be a little, really only have my mouse accessible right now. So I can't use any shortcut keys to zoom in with. So we have different width candles which represent volume. So they're volume-based candles. The thicker it is, the more volume was traded in that 40 tick range. And the color is based off aggressive delta or both for buyers or sellers, and it's also shaded. So more aggressive sellers in that 40 tick range will print darker, less will print a little bit lighter. And you can kind of see that. So we have delta based candles, which helps us gauge whether aggressive buyers or sellers are in control. We have volume based candles, which help us identify when there's a true movement. And we have these bubbles that represent aggregated trades from one entity. So for instance, if I zoom in here, you might not be able to see it very well, but I think it says 95, 96. This one says 63. So the more contracts, the bigger the bubble. And this was one entity that executed 63 contracts in a very short period of time. So that's an important level. Same thing with here. These are important levels. And what these lines represent, they're usually lined up with a push, and it's kind of a zone. You can call it a pressure zone where aggressive sellers here really pushed the price down, and it moved. Let's see, what is that? 36. Well, moved a few points, then came back and retested it. And I think that's where the day ended. So we'll see what happens. All right. We have some buyers up here that tried to push the price up, and there was some aggressive buying, but essentially the sellers just ate up all those aggressive orders and pushed the price back down with pressure. So that's kind of what we use to trade. These zones are effort zones. When they stack like this, it's kind of a danger zone, almost like a battle it's almost like a basketball court and the two goals, and they're just going back and forth between the two. So these areas are dangerous. I was lucky to get profitable in a couple last two back testing days, but I did get destroyed a little bit because I kept trying to take moves in these, what another streamer that I follow who's quite entertaining, 0 Day J, calls a cuck zone, which just makes me laugh all the time. So let's see what happens. We're gonna pull up the backtesting window, and we won't probably go through the entire session. on this video because I am a little tired. But we're gonna start. We're gonna do it for as long as we can, and we're gonna run it at your real time. So I believe I anticipate at this point in time, I really anticipate price to make a move back up because we're kind of oversold down on the 90-day. We keep moving lower, so we are definitely trending lower. But at some point, we're going to come back up to that value area on the composite and test it. So let's do it. Speed is 1. Let's play. Oh, we can't do that. Let's pause this. We need to change the day to 6 and change the time. Actually, I have to type here. That's a 0. 9:30. This is our back tester for Deepcharts. Pretty sick. So we reset it and set it. And we'll start it up. There may be a gap here because we're discounting. We're not using the RTH session. So price opened up with a gap to the top. So we had an up move overnight. Creating a gap up. So these bars are moving real fast. So it's 40 range. It's kind of a hyper scalping chart. So decisions have to be made fast. So we have those areas marked. You have to pay good attention and then eventually just smash the button. So right now, no trading, just watching. Give the market time to start to print some price action before we get involved. I don't put any hard time rules in, but I'm exploring getting involved prior to the 15-minute opening range trade window, first 15 minutes of trading. If the price action presents itself in a way that it makes sense. Right now, we're just watching. We're about 1 minute into the session and we have a pretty tight range. A little back and forth trading going on, a little bit of indecision. Slightly up, but you can see the green effort zones and the purple effort zones being created on both sides of the initial range. So we're about 2.5 minutes into the market and we have two-way price action, fairly balanced in nature. We also still have a gap to the bottom, which I would think we would close, and I might look for rejection from this red zone down here. If we break through this red zone, we might look for a move down to the next zone or back up. So we have extension to the top. We're about in our third minute of trading for the day. That's a pretty strong move up. We did have some volume. Had a little bit of stop and go, impulsed up again, a little bit of two-way trade before it decides to go up higher, consolidate, or reverse back down. Currently 933. Price is continuing to slowly climb higher. So what's interesting about these zones, none of them really played out. Price never came back and tapped them to test them. So they could, prices move far enough away that this could be a zone that price still comes back to test. These are some point of controls that are marked. Now into the fifth minute of trading, and it looks like we're having a little bit of difficulty pushing any higher. So we've moved. I always like to take a look here. Almost 200 points. Now we're consolidating. Do we push up more or do we reject back down? That is the question of the day. We have this two-way trade with these fat effort zones pushing price back and forth. We could scalp this small range back and forth, but not looking to do that right now. We're now in the 6th minute of trading. We're starting to get a failure back down to the zone. Making lower highs, lower lows. We tap back into that zone. I would have been okay taking a short from there. Maybe if we tap back into the zone, I'll take it again or enter early because that was a error. And it's good to make the errors in backtesting because hopefully you can stop making them before you take it to the real market. Lots of buyers getting absorbed here in this selling effort zone. Our stop should have already been in place though, because I was too busy talking, and I'm gonna put it behind that effort zone, which just pretty much got stopped out. Actually, this is crazy. I think I entered in the wrong direction. That's ridiculous, man. I must be tired. So I just closed that out. I don't even know what's going on. Thought there was a zone there. I'm starting to get delirious. So I'm not sure how long we're gonna stick with this, but we'll do our best. Lots of buying pressure and aggression, taking it back, extending the initial balance higher. So it looks like we have a direction. And we're going to do a little scalp here. This is a nice strong zone. So if we can tap back into our entry, we're looking to make a little bit more than 1-to-1 on this. So we'll basically just retake it to the high. We're consolidating higher. You can see another test down and a rejection. Buyers are strong at the top here. Aggressive buyers stepped in, another strong effort zone printed, and price may not come back to our entry. Starting to extend farther away from it, creating some stair steps with pretty high volume in this area. But sellers absorbed the high buying volume and the aggressive buying effort. I'm not convinced that we continue going up anymore here. So we just remove ourselves from that entry. Lots of buying pressure, high speed of tape, but price is meeting some selling effort. It left it tap back into it. We missed the entry. Let's see if we can get it again. Putting the stop loss behind the zone. Hopefully not getting stopped out before we set our take profit. I think we need a little more space. We just gave that money away, right? So I did say earlier that it looks like a buying day, right? And now I'm shorting. Do we call that cognitive dissonance, or is that just, I don't know what that is. So we did tap back into the zone and hit the 1-to-1, but we were not in the trade. So my bias at the moment is to look for opportunities to buy. We're about 11 minutes into the session, and that short would have played out. We just had to take on more risk than we'd like to. I would have liked to take that short as well. I refrained due to the fact that I have the long bias at the moment. Trying to stay away from shorts. I don't think it's that bad to trade it both ways, but I'm trying to keep it simple, not overcomplicate it. Pick a direction, look for openings in that direction, and then just until you decide that you're wrong, and then flip bias, and then if you're wrong again, give it up, quit. Okay, so we see some structure here. I like the volume-based candles and the delta-based candles because I can look more zoomed out and kind of see the shorter time frame and the longer time frame together. But keep in mind, this is all the first hour. All right, we've had quite of an extension up 228 points. And while I was talking, we haven't really missed anything, so we're still good. So a pullback to these bigger, fatter candles is usually not too bad of a strategy. That was another one that I would have probably entered if I was just hyper scalping and just reacting to what I see as opposed to trying to wait for it to come to me. We can see that green candle, the thick candle there is holding both of them, and they're holding higher. And we're close to setting the opening range. So the opening range is set. So the first 15 minutes of the market, opening range high. Right there. We reject pretty hard, and then sellers step in but get absorbed right back in this strong green candle area. So this is a complete confidence trade. Aggressive sellers got bought up, multiple green candles that are holding the selling pressure. We're going to take this for extension. So we're looking at volume, we're looking at absorption, spots, we're looking at delta. I think we're going to just let this run and just hope. And we still got stopped out. So what I thought was going to happen did not happen. Yet we're protected, right? We minimize losses. And now price is starting to move back down. So is this the end of the extension? Do we think there's more room? $230 points. There's 240 points. There's more room. Aggressive buyers are pushing. We're going to give it another shot. You have a pretty strong protection level. We can risk 500. See if we can zoom out and see what's up to the left. So this is a zone right here. That's what we're targeting. So if I didn't mention, we are replaying in real-time replay. Revisiting the past. I don't even think we need to take on that much risk, right? We're going to put it behind this zone right here. I don't mind taking a few losses as long as we keep them small. Bam, stopped out. So my original stop would have been better. And I made a decision out of fear. So, but it was a quick stop and we can do it again. This time we're going to put the stop behind. And again, target our zone. So we can be wrong a lot and still be super profitable on the day. It's absolutely crazy. It's kind of counterintuitive to think that, yeah, I can take more losses or equal losses to wins and still be profitable. But the more I backtest, that is what it's showing me. If you think you're going to win 80, 90% of the time, you're definitely trading scared because you're not your winners are going to be really small on average. I know because that was me. So you got to trust your levels. These levels were previously identified on the. So we made it to target, or we would make it to target, but the problem is we didn't get our entry triggered. So that happens sometimes. We did not chase it. I still think we can take a little scalp here, as a matter of fact, though, because this is a strong candle. We protect against the one below it, 535, and if we can take a one-to-one, make it to the middle of that zone. I think we get to that zone. But we have a little bit of consolidation happening. This zone at the bottom here is still live. So that's interesting. Okay, that's a good sign that we broke through that zone. Well, nearly broke through that zone. Buyers are still there with volume and aggressiveness. We're exchanging in a pretty tight range. So this is that ping pong bullshit. So we get stopped out again. Strong selling zone, tap back in. Strong selling zone, tap back in. Break through these aggressive buyers. They should protect and try to push back through one more time. Still have the long bias. Willing to take it back up again. Aggressive sellers stepping in lower at lower prices with speed and effort. I like to take it back up to this strong zone that we're likely going to bounce off of again. Kind of have a short bias now looking at all of this selling effort and ripping through aggressive buying pressure. I think we're going to play a pullback here, and this is going to be a nice little scalp. Or a nice stop out. Stop that again. Yeah, I see what I'm missing here. So that level right there. We return to the POC. For the day. We had sellers getting absorbed up here. I'd like to take another shot. We're gonna make our stop a little wider here. So we're taking on a little bit of risk here. But our take profit is gonna be up. Actually, right there. Kind of where these aggressive sellers stepped in. See if we can lock in a W. Lots of buying pressure, lots of, a little bit of speed, a little bit of volume. Pressure is increasing. See some sellers starting to push it back down. We print another zone. Makes me feel confident. Looking at the speed of tape. Looks like it's resting for a moment. Or it's coming back to the entry. Moderate selling pressure. With another zone printing because of that effort. It's hard to make a dollar, yo. It's hard to make a dollar. So time flies when you're having fun. We're about 29 minutes into the session. It is 9:59 Eastern time. So we've been in this hyper scalp for a while. I want to be out of this trade. Don't care what happens. So we dip below the point of control for the day. Continuing down. Picked a good time to exit that trade. Now we're at the value area low for the day. Kind of returning to about, see how far we've retraced. 50%. So before we make any more mistakes, we'll talk this out. This is a no trade zone. Because we can definitely go lower today still. We're still in the initial balance. We have 30 more minutes to set the initial balance, and we've moved over 380 points today. So that's a big move. That's an above average move. I think we can try to take it back up again. We're going to do a market buy here. We're going to put our stop loss behind the zone. We're going to target the top of the bottom of this area. So close. So fucking close. Man, this is brutal. I think I like hyper scalping though because you're in and out. You're not in very long unless you're holding something and following it up. But man, 300 points happens like every day now in the NASDAQ. So we get stopped out again. We're now in a area that I have marked. Now retraced back to about 70%. So I still have a long bias. But how far can we go down before that's realized? Well, we could tap off the 7 or the 786, which I don't have annotated. Um, there were some buy zones here that being protected. I think we come back to test the value area. So we get our first W. Come back, set up our next entry. Stop loss 450. Take profit back at the POC. It's 900, about more than 1.5 to 1, closer to 2 to 1. Let's see how my stop placement is on this one. Doesn't look good. Just too tight. I'm just putting it too tight because this is likely good unless it continues to go down. And now it was good that it was tight, right? It's all perspective, context. All right, so now we're looking to the volume profile to give us some help. I see a lot of aggressiveness down here. There is some volume. I would say if anywhere, this is the spot right now where we're at. Like this candle. If we break through that candle, we're coming all the way down to here. And it looks like we're holding it. Buyers are getting absorbed. Those were hard rejections from this range. Yeah, it's a tough day to trade. So at 10:09, 21 more minutes before the opening range gets set, or excuse me, the initial balance. I like this. So we had a lot of aggressive buying. It got absorbed up. But if we look down here, sellers really got to push hard because we have lots of aggressive buying pushing the price up. We have volume, positive delta, strong rejections, pushing the price down. Now we're moving back up. Right below this previous area where sellers really applied a lot of pressure. So we take a W there. Approaching the POC. I should have held it to the POC. So buyers stepping in to buy underneath the point of control. We're going to re-enter if price comes back down to this area. Lots of aggressive buying. We do have some aggressive sellers and some significant volume being traded here at the top. I don't know if it taps into the zone. There we go. Put our stop loss behind here. This is about a 1-to-1 scalp. Expecting it to range here up to the POC, but it doesn't look like that. Looks like it wants to continue down. You know, thought our market bought that. Okay, so what I saw was over to the left, we have this area. Bring this up here where a bunch of buyers stepped in. So I was waiting for it and I didn't even have time to say it, but when I saw that area over there, and then I saw this green candle print really quickly after these aggressive sellers got absorbed. I was just like, I'm in, because this is a very protected range. It'd be so far as to feel safe moving the stop all the way up here. Because if it gets through there, it's totally invalidated. Selling strong could get stopped out here. Be a tiny loss. Man, sellers are strong. You start to think like, oh, well, I should have put it behind this one or behind this area over here. And you don't know, man. You don't know. Like, we're in the present here. This is where the action was. That's why I put the stop where it was. But maybe it's better here. But there's always another trade. So 15 minutes until we set the initial balance. Actually, what we need to do up here is take a short. I'll have time to talk on this one. Sorry. Holy shit. That buying is strong as fuck. I just want to get on that train. Just jump on it. This right here. This like jump on. Let's go. Take my money. We may have to change our plan. If I get stopped out, I will take another entry down here. And I'll take a short here. It's a strong buyer absorption there. We could rotate all the way back up. That's a barcode. All right, which way does it go? Looks like it's going down. Nope. Not yet. We're about 8 minutes away from setting the initial balance. And we're building value. This is the cuck zone. We break out. As I said, we're coming back to take that out. So I didn't enter a trade. Didn't pull back far enough for me, but that was crazy. We're going to get in again. Or stop. Find a point of control. Take profit. Value very high. Just got missed getting filled. Looks promising to the upside. Strong selling pressure. Passive. Buyers absorbing the selling. Got some effort there. Missing our entry by a tick, but it rips back down. and through. Crazy. Crazy, 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 crazy. Holy shit. So fast. I wonder if it comes. Oh, we need to buy here. Okay, when I'm choosing a target, there's a couple things in mind, but one of them is I know that there's this selling zone. So it has a good probability to tap into it. Maybe not so much now because this level below. But if it does make it up here, we're going to find some resistance. We have all of this resistance up above. Gives me a little bit of a cushion. And when I look over to the left, there's a high volume node right here, this red peak. And then we got a bunch of selling pressure back down. Aggressive buyers just were getting filled. Passive sellers getting filled. The other reason is because this is about a 71 to 78% retracement where we could have a continuation to the downside if it doesn't go up. So that was a nice trade. But price pretty much went right through that zone, then retraced. Could it come back here? We'll see. Four more minutes until the initial balance is set. I'm still on a long bias here. Once the initial balance sets, I'll likely stop there. Continue when I wake up tomorrow after some coffee. So when you go back and review, you gotta pick up all these thoughts that you said out loud. Am I wandering? Am I not focused? Or is there just nothing to see? So the mind just kind of drifts. Three minutes till the initial balance is set. Let's clear all the lines. It won't clear the ones from the other chart though. We're looking here. Here. And here. and here. Kind of stuck between those two zones there. 1 minute to print. So the IB high is up here. The IB low is down here. We're at the 70%. So this is one of those cuck zones. You just don't want to be there. It's not a good place to be. I mean, not maybe you want to be there, but I don't want to be there. But I like this. It's worth a shot. That's not looking good. Well, we have protection, volume, and aggressiveness, along with buying pressure. Very nice. I don't think it comes back here. It might come. Yeah, I don't think it comes back. With that buying pressure. We break through, hold above here. I'm in for long. Again, still long bias. I think if it breaks back down, I'm gonna just wait. But if we break above, consolidate, hold. If I see some aggressive buying pressure after consolidation, I'm gonna probably fire that. Okay, so we're now outside of the value area right there. Do have buying pressure here. Buyers are still stepping in. Let's zoom in so we can see this like close. Oh, wrong button. So it's going to give us a nice bird's eye view. This is a tough spot because, you know, breakouts don't happen that often. But we have room to the upside, momentum to the upside. Innocent until proven guilty. Did not mean to enter there. Start putting under below all this protection, and we still get fucking tagged. Amazing. Just rip through. That's crazy. That's good knowledge, though, to know that these zones don't always hold. Fuck, what am I supposed to do? Put my stop way the hell down here? I can't take on that much risk. So I guess the answer is to trade MNQ so that we can widen our stops and have a little bit more room for error. Well, we'll just practice and pretend like we have a money and do the same thing here and just treat it as if it was a micro was or mini was actually a micro. We can do that. So I'm going to widen my stop to where I think it needs to be, instead of where I'm scared to lose. I don't think that's a bad strategy though. Like being conservative As long as it's not too conservative, meaning you do have to give yourself enough space to where it seems fair. And I felt like that was fair. But obviously, I missed it by just a little bit. Um, just crazy. So maybe 50% below the area that I think 50% below the area, the protection level. So if this is the protection level, man, these are so fucking tiny. And I can't even fucking click on it. It's just silly. Should have been below there. But it is the cuck zone, right? Like my target was way up here or here even. And we still may get there. But it's gonna happen fast and I'm gonna miss the move and I don't want to enter in the cuck zone. And there's room to catch a move up higher. Like, but maybe see this is where I start to question whether no, we're in the cuck zone. Don't do it. Don't do it. It's not what happens, it's where it happens. It's not just what happens, it's where it happens. And it's happening in the cuck zone, so I think I don't pay attention here. Other than have a bias to look for the breakout to the upside. So we're an hour and 10 minutes into this session. I know I said I was going to close it out at the end of this initial balance here, but kind of want to see how this plays out. But I will likely not take another trade till I come back in the morning and then start the replay again. So next video will basically just continue on till we get to the current day, and then we'll just do a replay of every day. Okay, what am I going to consider a break of the cuck zone? Will we tapped out of it and rejected back in. So that's not it. Cuck Zone, man. What a fucking funny name. So that's from Zero Day J. He's on YouTube. Follow him. Just, man, he's a Long Islander and he's funny. He's a funny dude, man. It's the stream that I probably hang out in the most is when he's streaming, just because it's just kind of funny and says stupid shit, and he's got some personality and talks a little bit of shit, but deep down, you know, he's a good dude. So it's fun to watch him crushing it right now. So we're still in the cuck zone, but that's the second zone that's printed, and they're stacked on top of each other, and they're kind of thick. So now I'm going to start to look for this long. If we can break above where these aggressive buyers got absorbed with a little bit of effort, maybe a green volume candle with some delta, or a speed of tape, a green speed of tape that is up here on this first or second standard deviation, I think we're in the money. But we're going to just be on that market buy button, ready to send it. Getting close. I can feel it. I can feel it setting up. We're starting to close above the cuck zone. So this is the top of the cuck zone, I'm saying. So we're out of it. And we're above it. Just give me a little bump. There it is. And this will be the end of it. Whatever happens on this trade, we'll pick up tomorrow. But so I waited for the setup. I saw some things that made sense to me at the first moment that I saw the opportunity. I fired, no thinking necessary. And it feels pretty good to have that rapid, just before you can even speak it, you're essentially just reacting to it. And then understanding that you could still be wrong and anything could happen, and it's a probabilities game. But like I said, I'm widening the risk up a little bit. I can always close it out early, but just in case we get a wick down or something. But I don't plan on taking that much drawdown. I'm thinking right here, if we break back through and these aggressive buyers can't protect, like this would probably be my level. So, and it looks like that's happening right now. Let's see if the buyers hold that level. See if they can pulse some pressure up. We need some help. So this is where sellers were absorbed before. We get stopped out. So I moved my stop, right? I had it right here behind the zone, and I think we still get stopped out. So we saved a little. I think we're down for the day, yo. So it's been a fun session though. I've had fun kind of following the action and trading it, and we're back to the point of control. So essentially, to be honest, we failed back down into the cuck zone. So it was basically a failed auction. So now we're back in the cuck zone. So I don't think that was a bad trade. But we were playing the breakout and we didn't get the breakout. We got the revert to the mean instead. Now it's dropping below the point of control. And we'll pause it there. I think that's a good place to finish or start tomorrow on our next video. So I think we're down a little bit on the day here. We'll kind of review it tomorrow once the day is finished, but it doesn't really matter. So we're just practicing. Good night, good morning, wherever you're at. Happy trading. Stay smart, stay safe, and hopefully come back and check in on my progress. We'll be doing these every day. Once we get to current day, we'll review and put out a video every single day, replaying the market tick by tick on a 40 range chart, trying to make moves and learn and evaluate the long-term profile. But we are moving up with lots of resistance in this gray zone that I had marked before. So it's really resisting upward momentum.